Good morning, everybody, and welcome to this week's Motor Trade Radio podcast in association with eBay Motors Group. It is Saturday the 25th of January, and you're joined by myself, Philip Nothard.
And me, Curtis Hutchinson. Busy old week this week, Phil.
Yeah, for everybody, I think.
Yes.
Yeah, it's been a generally busy month, I think, but I think this week it started to get back to the way we left 2019, isn't it, with a lot of activity taking place.
Yes, yeah. Last week we were sort of reflecting on, it was a bit quiet this week, but we're back up to speed. There's plenty of headlines to go through this morning, and we got an interview which we can tell you a bit more about in a minute.
We have, yeah. I mean, we've obviously mentioned the Leven jobs, haven't we, and dealership up in Scotland there, and we've got an update on that, haven't we, this week?
We have, yeah. We got it's a sort of good news update on that because the Leven Motor Company has actually been acquired. So the remaining sites in Edinburgh have been acquired. So we'll give you the lowdown on that. And also last week, Vertu acquired 4 Volkswagen sites from Sytner. So, and we're actually delighted to have on the show right at the end, Robert Forrester. So we'll have an interview with Robert Forrester who'll talk us through that deal and indeed the Leven deal as well, because he was involved in that along with Cambria. Vantage Motor Group, we've got an update on how cost cutting and loss-making closures will boost Vantage in 2020. Now, if you're looking for a new franchise, then consider MG. And it's a funny one, this, because we can go 11 months without talking about MG, and so far they've appeared in every show this year. So MG, they're making some bold claims about their registrations this year and how they will increase. And we also reveal the City selling the best value used car in the UK.
Yeah, definitely. So we'll start off with the first one. So again, we have mentioned this now for the last couple of podcasts, and as you said earlier, that Leven, it's an article in Auto Retail Agenda that brought the news on Sunday evening, and this is that the jobs at the Leven car company, which went into administration earlier this month, are expected to be saved under a deal which will be split businesses between Cambria and Vertu. And as you say, we had Matt Lavery on recently from Cambria. I'm not sure he knew about this at the time. If he did, he certainly didn't tell us, did he? And obviously we've got, like you say, at the end of the show, we've got Robert Forrester join us to talk a little bit more about it as well.
Yeah, now this is a really good story, and I must point out from the outset that I was corrected on LinkedIn this week. Apparently, it's pronounced Leven, not Levin. So, and I was corrected by our good friend Jim Reed. So he's a local lad, so he will know.
Good. So again, good news. I mean, what is it, Leven, which was formed back 6 years ago by Hugh Mahon.
You're asking for trouble now.
I am now. I'm going to get to it again on the podcast. I do apologise. My Scottish twang isn't up to the best of them. So it went into administration on the 7th of January. And the company, which employs 139 staff across its 4 dealerships, has ceased trading. But as I say, there's been a bit of an update that we're expecting that to go through with both Cambria and Vertu.
Yes. So what's happened is that Cambria has purchased the Aston Martin and Rolls-Royce businesses, and they'll both trade under the Grange name. And this is actually the first time that Cambria have acquired and opened any sites in Scotland, and it's also their first Rolls-Royce site. They've already got representation with Aston Martin because they've been representing Aston Martin since 2007. So this will be their fourth Aston Martin outlet. But it's worth pointing out that Leven actually invested a lot of money into the Aston Martin site. And I seem to recall at the time, which is probably only about 18 months ago, they were saying it was going to be the biggest Aston Martin centre in the world. So that is a really good acquisition for Cambria. And as you say, it ties in with what Mark Lavery was telling us about 3 or 4 weeks ago about the importance of that high luxury business to Cambria.
Yeah, exactly. So moving on a little bit on this one. So we've got the next story, which is AM Online, and this is talking about the deal a little bit more detail, and particularly talking about the Vertu Motors acquires 4 Sytner Group VW dealerships as well, isn't it? So we've sort of started off 2020 as we sort of finished 2019, haven't we? We were right last minute, and it is actually mentioned in the AM article with Marshalls doing the acquisition of the 8 VW franchises from Jardine that finished on the December the 18th. And as you say, we've sort of started 2020 with Vertu taking 4 dealerships from Sytners.
Yeah, and they're all in Yorkshire. So it's Leeds, Huddersfield, Harrogate, and Skipton. So they've all been acquired by Vertu. And this is all part of Volkswagen reshuffling its pack a bit. And we've reported this before on the podcast, where the Volkswagen have looked at its retailing model, and they want to be selling more units from fewer dealers. So that in effect means fewer partners, which is why the likes of Marshall and Vertu are moving in there and increasing their representation with the brand.
Yeah, I mean the stats. I tend to try and look at the sales per outlet and try and look at what's happening in the manufacturers. And I think this data is slightly out of date, but we've seen a slight reduction in VW dealerships between April and December. But actually, it's more about the movement of those dealerships into, as you say, we've been sort of seeing with Johnson's Cars, with Vertu, with Marshalls taking over some of these businesses. But I mean, the sales per outlet at the minute, based on the figures earlier on last year, that were 1,057 cars per outlet. So that's a good volume to be putting through on a sales per outlet basis.
Yeah, and in terms of this representation, the changing makeup of VW, because we've reported on how Inchcape have sold various sites. So according to the AM story, 10 Volkswagen dealerships have changed hands during the last 2 months of 2019, and that's just showing how this whole trend is actually accelerating.
Yeah, there is a lot going on, and like you say, I mean, if people have been watching the VW, the VAG sort of restructuring, I mean, it started off 12, 18 months ago, where they sort of publicly announced that they were restructuring their strategies, etc., and they've continued doing that and really building that partnership relationship with the UK dealer network and obviously the EU as well. So again, I don't think this is the end of it. I think there's probably a lot more to come with it as sort of these franchise dealer groups start to build these relationships and restructure their partners with these manufacturers, particularly with people like VW.
Yeah, and also worth pointing out that Vertu will now have 9 Volkswagen sites, but also, interestingly, it adds to the 13 outlets that it's already got across Yorkshire. So it's really building that critical mass across the county of Yorkshire.
Definitely. And moving on, we have mentioned Vantage. I think it was at the back end of last year, and this is a story in motortrader.com, and the headline is "Cost Cutting and Loss-Making Closures to Boost Vantage in 2020." And we last covered this when we talked about Mark Robinson stepping down as the founder and managing director and sold his stake in the group to the management team. And I think we're still waiting to see where Mark Robinson will appear again. But again, they've done a little bit of restructuring and they've closed a couple of sites, haven't they? They closed 2 operations in 2019, Citroen in Morecambe and Honda in Barnsley.
Yeah, and this story, as you say, from Motor Trader is based on research they did across the company's house, which sees that Vantage Motor Group saw pre-tax profits fall 14.3% in the last financial year to 1.3 million on turnover, which was up 1.6% to 284.7 million. So that was the year up until end of December 2018. So the operating profit before surplus on the sale of tangible fixed assets was 2.4 million compared to 2.1 million in 2017.
Yeah, and it is still a sizable group. I mean, it brings the group's total number of franchises to 22. That consists of 13 Toyota and 4 Lexus. They've still got the 1 Citroen and the 1 Honda, 2 Kia and 1 Skoda. So it'll be interesting when you sort of see the dominance of the Toyota Lexus there, and then these single dual franchises that they've got in these other franchise representation as to what will happen there. Based on the story we've just been talking about that VW partnership and things like this, you're starting to see how it is about these large groups having dominant partners in terms of that franchise representation.
Yeah, and also interesting to note the commentary within their filings. The company's house said that while we anticipate a disappointing result for 2019, the board believes that the actions taken in the second half of the year will put the company in a strong position for 2020.
Yeah. I would agree. And now moving on to the MG, and as you say, last year was the year of Volvo on the podcast.
Yes.
This year it seems to have started off with MG, and we're covering a story on AM Online. And interesting, it's actually when you start to see the AM Online and the connected stories to this one, kind of how much MG have been in the headlines within recent months. And this is about MG targets hugely ambitious 130% UK car sales growth in 2020. So again, I mean, they're looking at moving from 13,075 that they did in 2019 up to 30,000, I think it is.
Yes.
So that's a serious leap in growth, but they have been building those partnerships, haven't they, in terms of that dealership representation?
They have, because they hit their target last year of 100 dealers, which had been an aspiration for a long time. And as you say, registrations were up last year. They're actually up 45%. So, we spoke about them, as part of our coverage of new sales registrations for last year, because they were one of the biggest growers, albeit from a low base. It's worth qualifying that. But where they see the growth coming from is very much in EVs. So last year they launched the MG ZS EV, which I believe is a pure EV. And this year they'll be launching a C-segment EV, which they reckon will have fairly strong fleet appeal. So if it does, then that is potentially where some of these volumes are going to come from. But also worth pointing out that last year they launched the new this is all letters, believe it or not. This the MG HS C SUV. And so this year we'll see their first full year of both the C SUV and the ZS EV. Yeah. So you can see it's ambitious. I mean, this really is an ambitious target. So it might be worth a while trying to get them on the podcast at some stage to talk us through how they're going to achieve it, and what it means to dealers, and indeed whether or not they need more dealers to help with this throughput. Yeah,
I'm glad you read all that out. I would have got a bit tongue-tied with some of those coming out, to be fair, but as my Scottish explanations demonstrated earlier. But again, you can see where they are growing I mean, there's some comments in here that in 2019 MG made its self-imposed target of 100 strong dealer network, as you quite pointedly out. That, but actually, Stoneacre Group, Doncaster dealerships, and plans to have 20 new dealers on board by the end of June 2020. So you can see where there is ambition with MG with this. And what is interesting, and I'm not sure whether you've made the connection, but they have partnered with Santander, consumer finance, and very interestingly, Santander are the funders for Mazda and Volvo. And Santander are pushing very strong in the consumer finance sector, particularly around PCH and the growth of PCH. And they're working quite well with the Mazda and Volvo dealer groups. And it will be interesting that happened just at the back end of last year. So it'd be interesting to see what that does to grow volumes as well, because they're entering that sector. We've seen the growth of Volvo because we've constantly talked about Volvo through 2019. So them partnering with Santander could be an interesting move from these guys.
Yeah, so you're listening to the Motor Trade Radio podcast in association with eBay Motors Group, the only weekly podcast serving the car retailing sector, and available online at motortraderadio.com and by subscribing on Apple Podcasts, Google Podcasts, Spotify, YouTube, Deezer, and SoundCloud.
So the last story before we head over to the interview with Robert Forrester, and this is one on Car Dealer magazine, and this is interesting this one, because it's talking about the AA data shows where used car buyers can get the best value, and I suppose it's always it's subjected to the information that's available to them, etc. But what's your thoughts on this one?
Well, you know what, Phil, I thought you'd like this one because it's a data-rich story. Now, there are actually 20 cities listed, but don't worry, dear listener, I'm not going to read them all out. But the research shows that used car dealers in Edinburgh are offering the best value to buyers. And, the story says with affordable prices combined with low ages and mileages. And so in Edinburgh, the average mileage of used car going on sale is just shy of 25,000 miles, so it's 24,946, and the average price is £11,223. And it's worth pointing out that Scotland actually do very well in the top 10, because we've got Glasgow at number 9, Aberdeen at 7, Stirling at 4 and 3. We have Paisley, so a good showing there.
Yeah, like you say, I mean, it's price ranking out of 40, which they've done, which is a little bit more interesting in terms of it's all over the place in terms of that price ranking and the mileage as well. But I suppose anything with this kind of thing is down to the volume of data that they've looked at, and I'm sure some of our listeners will question why Chesterfield are last in the list in 20th position there, with a ranking down with 32,000 miles as average and £12,500 as the average price. But again, very interesting research from these guys.
Yeah, in fact, they do actually highlight that Luton is the city where you can buy the cheapest cars at the moment at 7,741, but they come with the highest average mileage, which is 65,402. So, yeah.
I mean, what is interesting in this is where they are talking about diesel a little bit, and this will be interesting because we've seen what's happening in Bristol, we've seen the rollout of some of the other cities as well around the ULEZ implementation from the local councils, etc. But Derby, they're talking about that diesel accounted for almost 50% of the used car market, but they've seen a 16.9% decline in the last 12 months, whereas Edinburgh, they've seen the biggest decline in percentage of diesel cars available on the market, and they're talking about that the diesel vehicle accounted for 45% of the used car market at the end of 2018, but a year later they only represented 37% of the market. So I suppose, how much is that about availability of diesels in terms of what the dealers can buy, etc., and the demand of diesel within those cities is the bit that I'd want to look into on this one. So we'll move on from that one then. So very quickly now, we are now going to head over to the recorded interview that we've done with Robert Forrester, and we'll head over to that now.
This morning, we're delighted to welcome Robert Forrester, CEO of Vertu Motors, to the show. Before we do, here's a quick look at his CV. His first job after graduating in 1990 was as a senior manager at Arthur Andersen, the accountancy firm, before moving to Brookhouse, the property group, as finance director. He then entered the motor trade back in 2001 as finance director of Reg Vardy, becoming MD in 2005. After Pendragon acquired the group, Robert set up Vertu Motors with his team, and that was back in late 2006. And that was set up as a new group to acquire and consolidate UK motor retail businesses. Listed on the AIM market, Vertu, which trades as Bristol Street Motors, Vertu and Farnell in England, and Macklin Motors in Scotland, is now the fifth largest dealer group in the UK. The group currently operates 124 franchise sales outlets and 3 non-franchise sales operations from 108 locations across the UK. So, good morning and welcome to the show, Robert.
Good morning, Curtis, and it's nice to be on.
Good morning, Robert. So again, welcome. So you've had a busy week, and welcome back to the show.
No, it's good to be on. It's been quite a while.
It has. It certainly has. So now you've started the year on a roll, should we say, having already made 2 major purchases in January. We've covered both stories, as I say, at the start of the show, with the Leven Motor Group, which will see Vertu with the debut of the Kia, Mitsubishi and Suzuki franchises. Do you want to just give us a bit more detail of what's been happening there and where those acquisitions came from?
Yeah, I mean, we've been obviously working with franchises we haven't got, like Kia, Mitsubishi, and obviously I know Dale from Suzuki. And as part of our growth plans, we clearly need to have new franchises and to grow scale with those franchises. The Leven opportunity clearly was a sad tale of the demise of that group, which had quite a diverse range of franchises, it's fair to say. And one of the manufacturers contacted us fairly quickly after the administrators had been appointed and said, would we like to look at it? Now, clearly, we are already in Edinburgh with 2 Hyundai dealerships, and we've got our Macklin business up there, and we've long felt that we were underweight in Scotland. We've got good brand awareness, and we do quite heavy marketing, but we're spreading it over a reasonably small number of dealerships. So actually bolting on to the Macklin business, these extra outlets seemed to make sense for us, and brought these 3 franchises in, which gives us more growth opportunities. We also actually bought a number of years ago quite a very well-located plot of land for development, on which we've got planning to build a new motor retail operation. So actually the ability to take these outlets in the short term, but then relocate them to this plot of land, which is out at Newbridge, was just exactly what we needed to do. And we worked very hard with the administrators over about a week with the manufacturers, and our team are experienced in dealing with administrators and receivers, unfortunately. And we managed to secure those 3 franchises in Edinburgh.
Now, Robert, to achieve the scalability you're always looking for, how soon would you expect to be able to grow with Kia, Mitsubishi and Suzuki? Because, as you say, you've made your debut now with all 3 brands. And what opportunities are there actually to do so?
Well, I think it's a case of getting these up and running first, and then just make sure we do a good job of these in the short run. Clearly, we'll sit down with the manufacturers, as we do with all our manufacturers, and say, are we able to expand? We'd never buy a business without explicit manufacturer consent. It's just not our style. My view is if we do a good job, then we'll work with the manufacturers, and hopefully they'll provide us with some other opportunities because they know what their representation plans are and who might want to exit, etc., etc. So be a case of sitting down with them over the next couple of months and working out. I'm quite hopeful we'll be able to expand with one of those 3 franchises in fairly short order. We've got something else we're looking at the moment. So it'll be a case of steady as she goes with them. But we are keen to grow. We don't really want one dealership, do we, of a franchise, and neither do the manufacturers for that matter. So it'll be a case of working closely with the manufacturers to achieve, objectives for both parties, really.
And I mean, with that in mind as well, I mean, the purchase and sort of indicated slightly earlier there with the major acquisitions sort of early part of this year, but the purchase came just after you acquired 4 VW sites from
Yeah, that
Sytner.
wasn't the plan.
No, I get, yes. No, I did.
We've been working on the Sytner deal since about, in fact, it was announced internally within those dealerships in Yorkshire in about October, November time. So it was kept very closely under wraps, though. I think most people know what's going on.
I think you're saying, as you say, the Leven one was really down a reactive basis.
So we had our entire strike force down in Yorkshire.
Yeah.
And then suddenly had to redeploy in Scotland. So the IT department in particular did an absolutely cracking job. In fact, we set a target to get Leven up and running by tonight, really, maybe with after sales starting on Monday. But actually, we've achieved that. So we actually opened Thursday night, Friday morning.
Yeah. So really what you're saying is the VW acquisition could have been done a long time ago, but if you can turn the Leven one around so quickly, is that what you're trying to tell me, Robert?
Well,
not that easy.
I mean, administrations are painful, aren't they? You're under massive time pressure. If you don't perform, then people lose their jobs. Things hemorrhage money. Administrators want to close things off very quickly, so you just have to move very, very quickly. Yeah. The Sytner transaction was smooth between both parties. It was very well planned. From sort of November onwards, we had our completion date and didn't move, and that was useful. Everybody could plan accordingly, really.
And with that, I mean, they say the VW moved into the sites of those 4 VW sites, and we won't. I mean, we'll touch on the EU. Political at the end there. I'm conscious of time on the show, actually, with yourself, Robert, on that subject matter. But in terms of conditions, in terms of market conditions this year, do you feel that now there is a bit of clarity? Do you think that's partly to do with these conditions, or do you think it's just something that has been going on in the background with the manufacturers and the dealer groups?
Oh, I don't think these transactions have much to do with conditions. Actually, I wrote out to our teams last night. I mean, the job is much improved, actually, from where we were even 3 months ago. We're not fixated by watching BBC Parliament and having crises and potential coup d'etats. We can actually get on now and do business, and people can live their lives without worrying about what's going to happen. Broadly, there's still some uncertainty, but the clouds are clearing a bit. And actually, strategically in the automotive sector, with the exception of we don't know what the trade deal looks like, which I think actually for the automotive sector is a problem. I mean, there's no doubt about that. That is a black cloud. We are getting a lot more clarity about where the whole industry is going. There was a fantastic paper by the analyst Bernstein, which said, broadly connected elements of vehicles is a commodity. Mobility, all this absolute nonsense about shared mobility was, in my view, drivel from the start. And I just don't think there's any money in that at all. I think, and a lot of the manufacturers are realising they pump money into things that actually were never going to come to fruition. Autonomous vehicles, sounds very nice, but I won't see it in my lifetime, which then brings us back to electric. Electric is where the direction of European car manufacturing is clearly going, and that remains the biggest challenge, driven by EU regulations, clearly, which will follow, no doubt. So I think strategically things are becoming a lot clearer. Doesn't mean it's easy, but we haven't got to worry about political uncertainty. We'll have the fastest growing economy in Europe for the next 18 months. I can pretty well assume that, in my view. I think the IMF came out and said that last week.
Yeah.
Given where we were with Project Fear, quite an hilarious situation. So I think a lot of clouds are shifting. Doesn't mean it's easy, because this electric vehicle point on manufacturer profitability and therefore retailer profitability is a big question mark.
Yeah.
Now, Robert, moving on to the VW acquisition, so 4 sites in Yorkshire. Now, VW is an interesting brand. It's very much in transition as it accelerates towards fuller electrification. But also, and this is something we've covered a number of times on the podcast, it's moving towards this model of selling more cars through fewer outlets. What was the attraction of this particular opportunity for you as a group?
Well, I mean, clearly, when you're buying a group of dealerships, and this was done, wholly in collaboration with the manufacturer, as you would expect, you've got to understand the representation plan. And Philip will know, because this is his territory, but as part of this transaction, Halifax Volkswagen actually closed before Christmas.
Yeah.
So we understand what the representation plan is. One outlet has been effectively removed in the process, and it's not just Volkswagen looking at sales per outlet and reducing points. I mean, that is a universal feature of where we are, and actually it's a much needed feature. Volumes are down, profitability will be under pressure due to electric vehicles, so the sector has to get more volume through fewer sites and have a collectively lower cost base. That is just an economic reality, and economic forces will drive that. Now, the manufacturers are clearly on that page and have quite detailed plans in that regard. So why Volkswagen? Well, you hit on it. I think of the investment that's gone in post-Dieselgate into electric vehicles is stunning, actually. Together with good strategies around digitalisation, and I think that have been very much at the forefront of that. So I suppose what the analysts would say is, if the electric vehicle profitability question isn't a good answer, then Volkswagen have exposed themselves. But given the situation in Europe around the political interference in the European car markets, then going down a heavy electric route is actually one of the few options. So Volkswagen have heavily invested, and we feel confident that they are absolutely, in 2030, going to be, even more significant than they are today. To be honest. I mean, it's got wonderful brand equity, Volkswagen. Very loyal customer bases. These sites are lovely sites. You'd expect that from Sytner. Sytner are well renowned for having nice premises. And the Volkswagen representation is good in that area. I mean, nothing wrong at all with Yorkshire as a place to sell cars. There's many a good business been built on selling cars in Yorkshire.
Yeah.
And this actually significantly grows your business in Yorkshire as well, because you do operate other franchises
we do, and obviously Farnell is a major player in Jaguar Land Rover in the area. We've got Vertu, Honda, Renault, Nissan, but this does scale us up around there, and that's, we would expect to see more growth in Yorkshire. I'd want more dealerships in Yorkshire, not less.
Yeah. Yeah, and it's interesting you say about that VW strategy, and I've been close to watching what's happening with them, and they're not just moving from ICE vehicles straight into EV. They've got a plan in that investment into that EV, but whilst maintaining presence and volume through the current lineup of vehicles, isn't it? So they are aware that their model lineup will increase with the addition of EV before it starts to decrease.
The British public did not wake up on the 1st of January cognizant of European regulations, thinking they wanted to buy an electric car.
Exactly. Yeah.
I mean, they didn't. And you start thinking about the practicalities. To some extent, I hope they all don't, because there's big queues on the M1.
Yeah. The structure will not sustain it.
There'll be plenty of cars not moving on the M1. So it's got to be a transition, hasn't it?
There is.
Personal view, I think the Europeans have gone very, very aggressive on these emissions targets and continue to talk about very aggressive on emissions targets. And I think it's a major challenge. I don't probably think it's doable, actually. I think that's going to put some significant stress on the European car industry when it doesn't need it. And you've seen that. I mean, Germany's practically in recession.
Yeah.
So we'll have to wait and see. But we will be doing our best as an organisation to sell electric vehicles, to educate customers as to why electric vehicles are suitable for those that they're suitable for. And clearly, they're not suitable for a number of people. But we have trained everybody in our business to understand electric vehicles and different powertrains and the different types of electric vehicles. And increasingly, a lot of us are driving electric vehicles, or with electric component at least.
Yeah, no. And with the VW, and just sticking with VW for a minute, but in terms of the opportunities, I mean, we've seen obviously with Sytner and with Inchcape, exiting some of their VW businesses for probably different reasons, I would suggest. But do you expect to see, just from what you've been talking about there, more opportunities with VW this year, and just obviously?
No more so than any other franchise.
Yeah.
There's been a lot of churn in the last sort of 6 months, hasn't there?
Yeah.
Actually, I think Jardines have also relinquished some to Dash.
Yeah.
So I think that's quite a heavy amount of churn, actually. That's not to say there won't be things happening. I'm sure there will. But I think there's going to be a lot of change in a lot of franchises as it happens. Last week we saw some big operators, wholesale closure of Vauxhall dealerships in some cases. So, there's a lot of change coming.
Yeah. And do you think a lot of it is driven by that sort of brand partnership between some of the groups and the relationships with the brands?
It's a combination of, you can never book the market. Mrs. Thatcher was not wrong. If you're blowing money in sites, you can only do that for a certain length of time. So as pressure comes into franchises, then people make rational economic decisions, in reality. And then overlaying that, you've got the strategic representation plans of manufacturers, which clearly aim to have less points. Some more explicit than others, but general travel is in one direction. And I think you overlay the two, and you've got a lot of change coming.
Yeah. And as you say, you look at some of those brand representations and you can see that where there is a strategic plan to have fewer operations to increase the sales per outlet, and then there are others where there is just a fall of sales per outlet and representation, which is a brand that is struggling, particularly in the UK market.
Yeah, I think sales per outlet's a really good measure, and sales per outlet's crucial because volume's important. But you've got to overlay a general expectation that we may see new car margins under pressure because of this electric vehicle issue. It costs more to produce an electric vehicle. I am unconvinced the British public wouldn't want to pay more. So there's some problem there. There's a margin problem for somebody, and it's probably a combination of a margin problem for the manufacturer and the retailer. And this is going to have a big impact.
Yeah.
I've always struggled with the concept of we're going to make nice new cars, we're going to charge more for them. I get that, it works. But actually, the British public have not got materially wealthier in the last 20 years. So, and I have a real bugbear about the small cars, the death of the small car due to the CO2 impact. How on earth you can have a set of European regulations on CO2 which promote big cars which emit more CO2 than smaller cars which emit less? That is still a complete mystery to me. But actually, a lot of small cars have ceased production in the last 6 months due to CO2 emissions. Mystery upon mystery, actually. But a lot of people want a small car, don't they? It's going to be buoyant in the used car market, but long term, I struggle with where that's going.
Oh, maybe after the week on Friday, on the 31st, things might change. But anyway.
I don't think they will.
I know,
I think that's going to make any difference.
No.
Well, speaking of which, and last question for you, Robert, as this is our last weekend in the EU, what do you see as the challenges and opportunities facing the franchise sector over the coming months? I'm really talking about short term and maybe in terms of consumer confidence and acquisition oppositions.
Yeah, it's interesting. Interesting fact I worked out the other day. Burnley have only won once at Old Trafford in the entire time Britain's been in the European Union.
Well, there you go.
So we're hoping for better things out. Right. I think the key risk is obviously in the trade deal.
Yeah.
For me, I think we have seen better consumer confidence. We've definitely seen better business confidence. You can see sales in certainly high end coming back a bit. I think when people, and I think people have already realised that businesses can now plan. They've got more certainty, and that's good news for the economy. So, whether the car retail industry is successful in the United Kingdom post Brexit will almost entirely depend on whether we have sensible policies as an independent United Kingdom and create a vibrant economy. That's fundamentally what we need. I'm actually quite optimistic on that front. We just got to sort out the trade deal. So I've never thought that Brexit was the be-all and end-all, really, in terms of the economy. So I was never bought into Project Fear as a concept. I think the automotive sector has particular issues with because of its integration in the European economy, but I think we're going to. I am optimistic. Hence why I'm buying businesses, of course. You don't buy businesses. Do you?
That's a good point.
It'd be a bit of a thing to do, wouldn't it, Robert? Yeah.
So, I mean, bear in mind, the majority of the people in the country supported Brexit, so they're quite happy.
Yeah.
And we found that. We found pockets of the southeast of England which were broadly miserable, and swathes of the north which were quite happy. And that does come through in sales sometimes. Yeah.
It's interesting you say that it's not kind of all of a sudden, the date in December, now the date at the end of the month, that's it. It changes. The automotive sector has been under sort of headwinds and challenges and opportunities for some time. It's never been any different, has it? I mean, that's obviously one of the exciting things about the automotive sector. But I think you're probably describing the sort of the Brexit as more of a distraction over time as well.
Well, I think long term it can be a massive opportunity, my personal view, because we have the ability, if we have good governance in Parliament and we actually have good policies, to strike our own course and do things for the benefit of the country. But that is entirely dependent on whether those policies work and are executed properly. We clearly have to have a trade deal with a major trading partner across the water, and we'll see whether we get one or not, won't we?
Yes. We'll know soon enough, probably, hopefully.
But the bottom line on cars is they send a lot more cars in than we send to them.
Yes.
Yeah.
No. Well, I mean, it's been a pleasure, as I expected it would be, Robert. And, it's great because I know, there's been talks for some time that you've had appetite for acquisitions through sort of the last, for some time and probably always, to be fair, but waiting for those right acquisitions, right opportunities. And, like you say, the VW one was a longer term planned opportunity, and the Leven was an unfortunate opportunity, should we say, for the business. But obviously you've managed to react very swiftly and efficiently to that, and which is great news for those involved with the Leven businesses anyway. Essentially it's managed to save many people's jobs and giving you the opportunity up in the area that you wanted. So it's been an absolute pleasure to have you on the show this morning, as always, and as I say, as I expected it to be. So thanks for joining us this morning, Robert.
No, absolute pleasure. Thank you very much.
Yeah, thank you, Robert.
So great interview. I mean, I think we sort of expected that Robert might have a view on the political position, but
yes, yeah. No, I must say we were genuinely delighted to have Robert on, because it's obviously been a very busy week for him. So finding the time for us was really appreciated. What great insight there.
It's quite interesting how busy it's been. I mean, the fact that the VW acquisition has been going on since October, yes. November time, in terms of that conversations with VW and that opportunity, and then the Leven was a reaction. Unfortunately, say the administrators got called in, and that opened up the conversations between Robert and the manufacturers that he's ended up taking on.
Yeah, because it's worth bearing in mind that only happened a couple of weeks ago. We're still in January, and that was one of the first stories we covered in January. So it just shows how quickly groups can respond to these opportunities, and what a great opportunity for both Vertu and Cambria there.
And it wasn't like his team was sat around doing nothing. They were on with something. dealing with the other acquisitions. So again, fantastic, and I think Robert wanted to get the Burnley beating Manchester United there at Old Trafford in right at the end, which
yes, yeah, I think that was written down in front of him, wasn't it? He was determined to get that one in.
Big bold letters, but yes. Again, fantastic to get Robert on, and again, I've seen some of his stuff around what Vertu are doing and as a business around that EV world and things like that, and it's worth looking out for Robert on his website, because he does do a few webinars and things like that. So again, look forward to having Robert back on and working with him as well. He's
also worth following on Twitter. He's probably one of the most prolific dealer group bosses on Twitter. So do go out and follow him there.
Fantastic. So again, great headlines this week. Very busy week. Plenty of other headlines out there. So do please head over to AM Online, Motor Trader, Car Dealer Magazine, Motor Research, Auto Retail Network, and others. So head over to the websites, and there's always new stories hitting. And they say never a dull week in the automotive trade, is it? As Robert's just alluded to there, lots going on.
Yeah, no, absolutely right. So you've been listening to the Motor Trade Radio podcast in association with eBay Motors Group, the only weekly podcast serving the car retailing sector.